Hi guys, just want to do a little market recap video here for you all. I know folks are feeling pretty dramatic about the recent turn down in the markets. Um, I'm hearing an awful lot of drama. I think folks forget that we came through this time in here in just this past October, and we did just fine. And we had big losses over short periods of time, and we found a bottom, and we bounced hard. And in fact, we made a big V-shaped recovery. This could easily, as I'm looking at this just now, realizing that this could be a head with two inverted shoulders, an inverted head and shoulders that could actually bring that down possibly, into this level here, or maybe a little bit higher, maybe to the 200-day, before it recovers again, give us a bit of a deeper correction. Nothing wrong with a deeper correction. If you're not trading it, or if you're trading it in the direction that it's going, then there's absolutely nothing wrong with that. It just allows for a bigger move to the other side when it's ready. Certainly, there are a lot of a lot of news that's coming out. This is a news-driven market and has been for a few years now. And today's downgrade of France by one of the downgrading agencies, Fitch, is certainly not helpful. Everybody's worried about Greece. Oil has been going very, very low, and we'll talk about that in a minute as well. I want to include in this video, since we're talking about the SPY, I've been doing a series of posts by special request, and one of the special requests that I received was for SSO, for Securious. And I want to point out that SSO is an ETF of the S&P. It's an ultra, so that means it's 2x the speed, but it's basically going to be just like SPY. So I prefer to chart the underlying index rather than charting a derivative like this that has leverage. So you can see that the charts look virtually the same. SSO, and there's SPY. So they look virtually the same. When we look at S&P directly, it has the same look. So I like to use SPY because I get a better idea of buying and selling volume. Certainly, I think that we're not seeing any worse selling volume than we saw in October. So I don't think there's any reason to completely decide that the market is rolling over and going to become a bear market. We simply don't know that at this time. The trend currently, the interim trend, the secondary trend is down. No question about it. You can certainly see that this is rolled over and this is going down. Where it stops, we don't know. There's the 50-day moving average setting up here, that blue line. That could be an interim strong support. That also coincides with this previous support level in here, which, as you can see, all of this price at volume at price here, that's where buyers and sellers come in. That means there's a lot of volume in these price points. So it already lost this first sort of volume level in here that had previously been the previous resistance area and was showing some support earlier today, but it lost that. So then we should keep looking at levels until we see the signals that it has turned around. If you wanted to get short in here, it's certainly reasonable. I prefer not to because the shorts tend to go down a lot faster than the rallies tend to go up, and I prefer looking for setups that I can take my time with. But if it's your bag to go short in here, it's certainly, for now, my market timer is red. You can see why. SSO is the same thing. If you wanted to buy it long or short, you want to wait, if you want to buy it long, until we see this signal in the SPY. If you wanted to go short SSO at this point, the nice thing about shorting derivatives like this is that you have decay in your favor. But of course, anytime you go short, and especially when you're going short on the index, you want to be very, very careful, because as soon as those turn around, you can get caught up with margin calls. So you want to make sure that you have hard stops if you go short on something like the SSO. A few bits of concern, other than obviously all the news and oil going down and France being downgraded and Greece worries, etc., etc. There's also this these selling of uh, tax selling um, stocks like MLPs, like this EPD, which I have been charting out, which I charted out also as a special request. EPDs and an MLP, certainly it's in the energy sector, and energy has obviously taken a hit, even natural gas, although natural gas has held up better than oil. This is the weekly trend line that you see in here. So if I change this to the weekly chart, you can see that trend line. If I go to the daily chart, you'll notice it bounced right off of it today. This is certainly rolling over at this point. We really don't want to see that lose that support. Because if a stock like this, like MLP, start losing their longer term support, this is clearly an uptrend in the primary trend. The way these MLPs work is folks buy them long term and they sit on them forever and they collect the dividend, and the dividend becomes an income that's tax free. You don't have to pay taxes on your income from an MLP until you sell it. So when you sell it, you then have to pay all those back taxes for all of those gains you've had for however long you've held it. So generally, long-term holders of this kind of product, they hold it until they pass it on, and until they die and put it in their will, because they just collect the income off of it. If people start selling this long-term, investors start selling this, that's something to be concerned about. That tells you people are willing to take huge tax penalties because they don't think that price can come back. Like their vision, their confidence in price is completely gone. So I would say that the simpler answer being the more likely one. The more likely one is that this is going to stop here and inflect back up. Obviously, I can't know that until I see it happen. So Monday will be the tell. Those are the things I'm looking at right now. The market's in a downtrend. It's not the end of the world. Sure, there's fear. Sure, there's news, but we've been through here before. So let's try and check the drama and just see it for what it is. Don't go long in a down market. That will keep you safe. If you just sit it out and wait for it to pull back and then rally again, you will have the chance to get back in the market and trade stocks long. If you wanted to go short now, that's perfectly reasonable. Obviously, it's the weekend at this point, so you have to wait until Monday and see if the market continues to the downside. If it is continuing to the downside, getting into some shorts that have good setups is very reasonable and will probably lead to profits. Meanwhile, if you're not into shorts, just sit it out. Take a break. Go for a walk. Don't stare at charts and tick watch and worry about every little bit that it goes down. Okay, that's it for today. I hope everybody has a really great weekend, and feel free to send me an email at thetradingwife@gmail.com if you have any questions, or you can ping me on Twitter at thetradingwife. Have a great weekend. Bye-bye.